Welcome back, ladies and gents. You know what time of day it is. It's 7:30 a.m. Eastern Time, Monday through Friday. Welcome back to your Crude Oil Squawk. We've got some great trading strategies for you guys this morning. We're going from the screen to the floor this morning. My name is Joseph James. I am a lonely old technical analyst here at SchoolOfTrade.com, and I'm normally here with my good friend Marty Errico from Traders Audio. Marty is on vacation for the rest of the week, so it'll be just me this morning. Looking at the charts this morning, we're looking at for crude oil futures. Now again, Monday through Friday. This week though, please be aware this will be a shortened week. We'll be going Monday, Tuesday, and Wednesday. So be aware, guys, the holiday is going to interrupt our trading this week. We will be closed here on Thursday and Friday. So you guys have yourself a fantastic, have a fantastic and safe 4th of July holiday. So today is Tuesday morning. We'll be finishing up tomorrow morning with the same time, same place. So be with us tomorrow morning as well. Once again, my name is Joseph. You can come out and see me every day of the week, Monday through Friday, at 8 a.m. Eastern Time. We're in a live trade room at SchoolOfTrade.com. I'm a technical analyst by heart. I'll provide you guys with a top-down approach today, looking at weeklies and daily charts, hourly charts, all the way down to those minute charts. And we're going to begin to analyze what's happening overnight. Specifically, I'm trading the U.S. session, so I'll be looking at the London trading ranges to see what's been happening right with our good friends across the pond. And of course, my job today is ultimately to anticipate the direction at the open, right? That's the most important thing. Let's try to anticipate where we're going at the open. If I can anticipate the open, get myself into an equity position in my account, right? Start to make some profit on some easy trades right out the gate. Then I can read the market personality for the rest of the morning and take it from there. I'm looking for the highest percentage trading opportunities starting at 8 a.m. Eastern Time. Guys, there are many, many ways we can trade crude oil futures, nat gas futures, euro, gold. There's so many different ways in which you can trade this stuff. Some of them are higher risk. Some of them are lower risk. Some of them are higher percentage, and some of them are lower. My job is to find us those high percentage trading opportunities that have a combination of low risk and a high reward. Let's get started this morning. And again, normally, without the holiday this week, normally we'd have Marty Errico here from Traders Audio, but Marty's on vacation the rest of the week here. So you're dealing with me here this morning, guys. Let's jump right into some charts today here, first of all. And of course, I'm going to start with the dollar because I have an argument for higher prices for the rest of the week this week. And I want to show you why I've been screaming this from the rooftops over the past few days. And that is this weekly chart on the dollar. Now, kiddos, if you're following along at home, remember, we don't use these weekly charts for trades. We use these weekly charts to kind of set the stage, to tell a story. And this morning, we look at the weekly chart, and the first thing we see this morning is the wedge. What else do we see? The bull channel. Okay, I got a price wedge here. Let me draw it up for you. Got a price wedge here. Going to mark up the lows, right? We've got higher lows. We've got lower highs. Right, lower highs, and that gives us the price wedge. Now, a price wedge is a very strong market personality clue. What is market personality in a price wedge? It's indecisive. We expect fake out breakouts. We expect range-bound markets. We expect to be able to buy the lows, sell the highs, just like we've been doing on gold this week. So the dollar index tells us right away, price wedge, look for consolidation of price. What else do we see here? Well, if you zoom back a little bit here, you'll notice we got a big clue way, way back in time in October of 2009, right? You'll see here we got that low here, big candlestick wicks here. We find the higher lows. Of course, that makes drawing this price channel very, very easy. What does a bullish price channel tell me? A bullish price channel tells me my job is to buy pullbacks. A bullish price channel tells me if I have to guess, I will err on the side of the long side. A bullish price channel tells me that if we start to break to new higher highs, we should see the test of the top of this channel. So where am I going with this? I have a feeling we're going to get higher prices this week. Now, I'm talking specifically about crude oil futures. And I want you guys to see what's happening on this price wedge. And I want you to remember how the dollar index plays into everything that we trade, no matter whether it's crude oil and natural gas or if it's euro and gold. Now, normally what will happen is this dollar index will bounce lower. In fact, in the newsletter we're about to publish this morning in a few minutes, the morning newsletter, we talk about this resistance on the dollar and how the dollar should go lower. The key word here, should. Now, what's happening is this. Notice the candlestick wick? We have a big wick at the bottom and a green candlestick body. What does that tell us, folks? That tells us this dollar is clearly didn't get the memo about should go lower. This dollar is clearly pushing higher. So we see the weekly chart. The weekly chart, again, I would expect to see this being a red candlestick with a wick at the top, right? Because we would expect to see the top of this wedge holding as resistance. It is not. This tells me that the dollar index is most likely going to produce either rising prices or falling prices. I'm seeing rising prices. And with a rising dollar, we have to remember that very unique correlation with crude oil. Now, rising dollar. Joe, didn't I hear you say one day, Joe, that there was a negative correlation of the dollar? Wait. Back up the truck. You're saying that crude is going to go higher with a higher dollar? Well, I'm lost, right? What happened to that negative correlation? Well, remember, crude oil is one of the only markets that has that tendency to break the correlation down. Every once in a while, we see it on gold. In fact, we saw it last week on gold when gold made that double bottom and then, bam, snapped back up. That we saw that on gold last week, literally right on the tape when the dollar index correlation broke down. Doesn't happen very often. But for crude oil, I want you to think about it this way. If I'm a consumer of crude oil, what is going to help me gain confidence, right, to fill up my gas tank and take the kids on vacation? What's going to give me confidence to go out and buy that new fleet of pickup trucks to start a new delivery service? What's going to give me the confidence to put a few more airplanes in the air if I'm FedEx, right, or UPS or Southwest Airlines, right? Remember, when the dollar is strong and we have consumer confidence, we're going to see rising crude oil prices. Consumer confidence numbers have been rising the past 3, 4, 5 weeks. We've seen better than expected home prices. We saw better than expected manufacturing data yesterday. This morning, we've got factory orders at 10 o'clock, vehicle sales, maybe vehicle sales will play into it, but most likely factory orders at 10 o'clock will be the big push today. As you can see, though, we've got confidence in this market right now. Now, whether or not this is the uneducated confidence, right? We've all heard that scenario where in the summertime months, the big money jumps on their private jets, right? The smart money who know the reality aren't here to stop anybody, and that bullish unawareness, right? That almost ignorance is bliss over the end of the summertime often results in prices fluttering higher. So I'm making a point here that we have a weekly chart on the dollar that's telling me we've got some strength in the dollar. We should be going lower right now, but we're not. That dollar strength, along with consumer confidence that we've seen not only in the economic news, but in the reaction on gold, guys, this clearly says that we should see a higher dollar and higher crude oil prices as the week progresses. Now, with that said, though, let's begin now to take a look at the weekly chart, or the we'll grab the 4-hour chart here of crude oil to get started with this morning. And I want you to see here exactly why the crude oil market, the price action does support higher prices in the long run this week. You'll notice here we are. I've got a bullish price channel. I've got some trend lines that I've drawn in. You can see the higher lows. You can see the higher highs. You can see the price channel. That's pretty easy. Do a quick little trend line right here because that's where we're going to be looking to buy a pullback, right? That 96.35 area. That'll be a great spot to buy here. But I honestly don't think we're going to get a chance to. I think we're going to end up breaking out here and fluttering higher today. As you can see, we got quite a bit of a sell zone overhead here, quite a bit of resistance overhead on this chart. So what I'll be looking for here is I'll be looking for price to pull back into major trigger zones, and I'll be looking to get long here on crude oil. Consumer confidence numbers are at record highs. New home sales, record highs. We've got the dollar index moving higher, right, suggesting confidence in the dollar, and now we're going to use this crude oil chart, right, to further solidify that bullish tone to the market. You can see here, we keep getting new higher highs, we keep getting new higher lows. Sounds like a perfect recipe to be buying pullbacks. Now, if for some reason I'm wrong, and guys, I'm wrong for a living, right? Being wrong is part of being a trader. As we say in the live trade room, we don't think about it being wrong. We just think about it as some trades work and some trades don't. What I'm going to do this morning is I'm going to look now at this 60-minute chart. Here's a 60-minute chart of crude oil. And this 60-minute chart really shows me some excellent spots where I can be a buyer. Now, in the time that it took me to get into this call this morning with you guys and gals, we have since broken out of this narrow price wedge. You'll notice we've been trading in a consolidated range over the past few hours of the morning. And of course, whenever we see a consolidated range, we usually see a breakout. Don't believe me? Take a look back in time here, and you'll see the results of these sideways ranges. Oftentimes, right, they will result in a big old breakout, right? So if you look back in time here, you'll notice the consolidation of the ranges will oftentimes result in big breakouts. So here we are now, consolidated range. We are expecting a breakout. If somebody put a gun to my head right now and said, JJ, pick a direction, I would pick to the buy side. The 60-minute chart confirms the bull channel. The 60-minute chart confirms ideally it would be great to wait for a pullback to be able to buy the lows of this channel. So if you can find that buy opportunity at the lows of this channel on the way up, guys, that's the home run trade. On the other side, though, we know, heck, if it's going to break out and keep going, we'll be buying pullbacks here on the way higher this morning. 60-minute chart, 60-minute chart. This chart's already posted for you on the blog. I believe I already posted that link there for you guys this morning in the chat box. Check that out, and you'll see the charts for today. On top of that 60-minute chart, though, I want to take a look at the 5-minute chart. The 5-minute chart is going to tell me exactly where we need to break above in order to start buying pullbacks. And there's my level now. The weekly chart of the dollar told me I should be bullish on crude oil. The 4-hour chart of crude oil showed me I should be bullish on crude. The 60-minute chart told me to be bullish. Now here we are on a 5-minute chart. First thing that stands out, this is a big clue. The first thing I see this morning is the overnight trading session looks very, very suspicious. We do not see this very often, guys. This is not something that happens very often. We usually do not see price trading right in the middle of the overnight trading session. This stood out like a sore thumb this morning. I was also talking to some of my students here at SchoolOfTrade.com about the volume today. One second. About that? Okay, so talking to one of my students this morning about the volume this morning, and they mentioned that the 0813 contract was almost the exact same volume as the 0913 contract. I said, well, boy, that doesn't make much sense. And of course, immediately, whenever we start to think something doesn't make sense, as traders, we're trained to think when something doesn't make sense, that sounds like something we should be aware of. So the first thing we saw this morning was this price action. This price action does not look very friendly. Okay, very sideways, very range-bound. We again saw that same range-bound trading on that 60-minute chart in the form of that wedge, right, that we just finished talking about. So we know the price wedge on the crude oil, or that consolidated range here on crude, was very easy to see on a 60-minute. You can see it here on a 5-minute chart. Very, very easy to see. And that's not very typical. Usually what will happen is, usually we'll be either at the highs or the lows of that session once we get in here around 8 o'clock in the morning, right? This is a little bit different. We don't see that range right in the middle like that. And then again, keep an eye on that volume today. The 0913 contract is very, very low volume. In fact, it's almost the same as the 0813 contract. So low volume is definitely on our radar today. And can you guess why? We have no major news until 10 o'clock this morning, and we're also going into the long weekend. We're going into the holiday weekend. Wednesday, Thursday, Friday will be pretty much no trading days for most professional traders. So this may be a sign of things to come this morning, guys. Be very careful with this crude oil price action this morning. I'm ready to get short here right now, though, coming out of this reversal zone. Right? I'm going to sell the reversal zone below us. I'm going to buy the reversal zone, sell the reversal zone above, buy the reversal zone below. Just a quick heads up, the previous high of day, this is yesterday's high of days at 98.28, 98.28. And of course, as you can see here, guys, we have levels above us. And these levels above us, 98.61, 98.46, 98.61, 98.77, and 99.03. All right, as you can see, levels above me. I will use those levels as profit targets. And again, when we get this breakout to close above 98.46, that's our sign to be buying pullbacks going higher. I'm then going to use these as profit targets overhead. I will also look for the reversal at any of these levels overhead as well. All right. Thank you, Don. Good to see you here this morning. 97.82 below me. 97.82. That's the prior week's high. Be aware of that level, guys. 97.82, a very important price level below us on crude oil this morning. 97.82, that's the prior week's high. That will be a line in the sand. We know if we do get below that level, we know now they've rejected higher prices this week, and prices will most likely collapse. I have levels below us at 97.66, 97.51. I have a trend channel low, right? That is a channel low off a 30-minute chart, and I've got 97.25 as additional support below me. As you can see right now, we're getting a nice easy short off the highs right now. I'm sure our students are making some money off this trade as we speak. And those are my levels here today on crude oil. As you can see here, volume is low, ranges are narrow. We're going into a holiday end of the week. We are expecting rising prices here this morning on both the dollar and crude oil. Be aware, long-term buys, short-term sells. And guys, I want to thank you all for coming out and joining me here this morning. My name is Joseph James. I'm going to post all these charts like we do every morning up on our blog. And of course, want to thank you guys so much for coming in and seeing us. Don't forget, tomorrow morning is our last morning here of the week. We'll be back here tomorrow as normal, Monday, Tuesday, Wednesday this week. Monday, Tuesday, Wednesday this week. And don't forget, head over to Crude Oil Squawk. There's a link on this on our blog at Sideways Markets. And of course, we're looking forward to seeing you guys here tomorrow morning at 7:30 a.m. Check out the link on the homepage of the blog. Oh, where is it? Crude Oil Squawk and Prep. That will take you over to the Squawk page as well. And of course, I've got all the charts posted there for you. Thank you, Miles. I appreciate that. I'm working really hard to make sure this has everything you guys need. So Miles, Todd, Don, if you have any feedback for me on how we can make this broadcast better, I am all ears. Love the feedback. Thanks for being here today, guys. Have a great morning. Be careful out there. And don't forget, have a great holiday week. Have a great holiday on Thursday if I don't see you guys here tomorrow morning. We'll catch you guys tomorrow morning. On a 23-hour and 30-minute break, my name is Joseph James. Thank you so much for being here, guys. We'll catch you here tomorrow morning, 7:30 a.m. Remember, you got to learn it so you can earn it. Adios, amigos. Bye-bye for now.